Yeah, there's a long-range chart of the Dow, and I was just curious about something here. I don't know why this volume is so high here lately, or if this is just the way it's displayed, but it seems like it has a hell of a lot more volume in 2012. There's one thing I was kind of wondering about and examining. It was all the timing of these events. Now, Bernanke actually came in office later on, as far as the chairman of the Federal Reserve. And I don't think this is ever going to happen again with the Dow because he's around. And you can thank him or you can cuss him but actually I think most people should thank him because, the people that are basically paying attention to this channel are in silver and gold. So he's going to make you rich, relative to other assets. But when this occurred, I keep making this observation about the platinum to gold ratio, or actually on Kitco they're displayed as the gold to platinum ratio. Right now it's about 2 or 3%. Gold is about 2 or 3% more than platinum, which is actually wrong. I mean, platinum during a healthy economy is about twice the price of gold. Twice during a healthy, strong economy. And Marc Faber indicated that the numbers coming out of China are BS. There's a slowdown going on. And I'm beginning to wonder, because I keep looking at this, palladium I don't want to think about too much because that thing can go all over the place. It's worse than silver. But platinum could be something that it's had an industrial use and a precious metals use for a long time in jewelry and everything. The fact that South Africa has had big shortages in it this year and the price got slammed down makes no sense. And gold is higher than platinum. I'm thinking, well, maybe that's because people are thinking gold is money and platinum's like a risk asset. But that's not, something's telling you the economy's not healthy despite all the rosy numbers. And Marc Faber, when he drops that hint, well, I think his thinking is really good. It's like I hang on every damn word he says. And there is a slowdown going on. There is a slowdown, despite looking at the global manufacturing index. Well, actually it went down a little bit in February, and we looked at that Baltic Dry Index. It was garbage. But I don't think these markets are going to fall like this because Ben Bernanke's in office. I want to examine a couple things before I look at this. At $24, $25 silver. I want to examine this again because to keep the big picture in mind, I'm going to go over it real fast. Dow's around 13,000 right now. You'd think with them printing money, the Dow isn't going to go up to say 15,000. I think it could be pretty easy. This is being conservative. The Dow to gold ratio 2 to 1. It should go to 1 to 1. That would put gold at $7,500. And if you just do the shadow stats inflation, which I think there's going to be more inflation than that, going back to 1980, and you traced it back, and you shadow stats inflation, gold would be at $8,000 an ounce, and silver would be at $400 an ounce, or $402. But we're going to have more inflation than from the 1980 to now, from what's going to happen in the future. And I don't know if it's going to take 10 years. I don't think so. That's what I'm thinking. I think this stuff's going to get out of hand. They're going to change it all. But figure this. The Dow to gold ratio, it might actually go to less than 1 to 1. So gold could be higher than the Dow. But say 7,500. This is being conservative. Very conservative. Silver 20 to 1. Very conservative, right? Very conservative. 375 an ounce. Over here, 15,000, 15,000 gold, silver would be 750 an ounce, right? 750 an ounce. That's being pretty conservative. Over here, 18,000 Dow, $9,000 gold, silver would be $450 an ounce, but actually more, so you're 15 to 1, maybe 10 to 1, right? Maybe 10 to 1, right? But it could be good $600 an ounce or more, easy, just off of this. Dow 18,000, gold 18,000, 1 to 1 ratio. Actually, this is not unreasonable at all. And with, silver 20 to 1 an ounce, it would be at $900. Actually, silver would probably be about $1,500. But is that in real dollars? No, that is in inflationary dollars. This is an estimate. You know, that's kind of weird when I was looking at this. This is kind of what Mike Maloney says. $20,000 gold, $15,000 silver. I don't think he's off. That guy I trust more than any of them, to tell you the truth. Out of all those silver ones that are out there, that have been out there a long time, I trust that guy more than anybody because he's using basic economic principles, and I followed his long presentations. It's not like hocus pocus. But I want to say something about some of these other guys. And you know, they all talk to each other like they're all consulting each other like they're a bunch of talking head professional experts. Big Swear, he'll state that fundamentally, in real dollars, silver is going to go to thousands of dollars an ounce. Well, you know, since I have a suspecting mind, I think he's telling people this because he wants them to hold it too long. I don't like that, what this guy's saying. He's got to know better. So, you silver bugs, well, obviously what's going to happen is the majority is going to get screwed. And I think there's a lot of physical silver snake oil salespeople too. You know, they're playing a game. They're playing a game big time. As far as what's going to happen here in the near-term future, what I think is going to happen is going to be another crash in gold. Marc Faber says the correction period is not over with. So I'm not saying it's just because of him, but it's some other things too. But I did this fib point thing, 1466 on gold, from the low below $800 to the high. That was back in 2008, 9, whatever it was. Below $900 is 8 something, or whatever it was, I forgot. And to 1921, the high, which is September 6th, 2011. A 61.8 retracement would be 1466. Silver gold ratio, not crazy to think 61. That would put silver at $24. And you know what? That's the fib point for the pullback on silver. If you look at the long range, 2008 to 2011 high and low, you know, low and high, 61.8 retracement point would be 24. I'm not thinking it's going to go all the way back down to 2021 or 18. I don't think so. $1,500 gold again, that would be, you know, the same ratio, 25 to 1. 25 to 1. Now, as far as the ratios, again, this was the ratios when it went down to here. This was back in, you know, in this area. This was the end of April. Ratio went down about 31 silver, so 31 ounces of silver to 1 ounce of gold. Got slammed down in March, went back up, you know, went back up to 44 to 1. Now, it got slammed down again here in, you know, I noticed it didn't get, the ratio didn't change as much in December. But I think this next slam down is going to be a little bit harder and a little more vicious. And I think it's probably over some type of financial crisis in Europe. There's going to be this liquidity crunch, so they run from the risk assets. Silver is a risk asset. Yeah, I know what you're saying. Silver's a risk asset, and it's going to go to, you know, crazy prices like $1,000 or more an ounce, probably, right? In inflationary dollars, right? What I'm saying is, in the short term, they're going to run from it. They're going to run from it. So this ratio could spike back up here again. Not crazy. You know what that would do on this chart? Make the double top and bring it back down, so this would actually make this into a bearish run, which actually would push it all the way down below this again. So this is going to be the next takeoff point. But anyway, you know, I want to point out also about his gold. You know, he hit this peak over here in 2008, whatever the hell it was. I don't even know. Around 1,000 an ounce. It didn't actually. I don't know if it did close at it didn't close at $1,000 an ounce, and then it retraced. It went up to another point that was lower. It retraced, went up to another point. It was lower, a little lower high, and then it crashed again. You know, that's kind of what's going on here. This is like a little double top, and then you know what? I ain't going by technicals exactly. There's one thing I realized about these technicals. This is really how things work in nature. There is mathematical things that occur in nature left and right. Everybody thinks everything's haphazard. That's exactly the way the markets go. The problem is people that are extremely technical they're geek idiots and they can't look at anything right. I think this thing's this Marc Faber guy is great, So, looking at it, pulls back right in this range where all this, that's not unreasonable at all. That's not unreasonable at all to hit these low points right here again. I was also going to point out something about oil. I don't think it's ever going to go down at this amount. It's going to go way the hell up, obviously, This is like a whole big bull flag, so this thing's going to shoot up, and there's like a little freaking bull flag in here to go up to 120 or more, 125, I don't know. And I'm going to look at some more of these live numbers because I want to know where the hell I'm in oil double leveraged, and I want to watch where the hell I think the next pullback point that's significant is going to be. But I think this whole thing is kind of like a bull flag, and it's going to go way the hell up. For every $10 the price of imported oil to us goes up, the GDP goes down 0.1% to 0.5%. So assuming that this thing's going to go up like a good $50, it's going to knock down the GDP at least a couple percent. So I'm a little leery of some of these predictions about $200 a barrel oil. I don't know. I mean, if I collect money from, this range up to 120 something, get back in there, it has a little pullback and it goes up to 150, I ain't touching it. I'm done. I don't know, unless I see a super deal someplace. That's what I think is going to happen. The LW Lindsey Williams prediction is going to happen. It's totally off of what the hell he was told, though. It's totally off. It's going to happen in 2012, the oil. One more pullback in silver. Now, I think when silver is going to really take off is going to be later on this year. And I know he just disagrees with some people who are thinking deflation. But you know what? There's a reason we're not going to have deflation. This guy. Him. Actually, if we're looking at this Dow Jones thing, this could actually form like a big giant double top pretty soon and crash like a son of a bitch. Excuse me, but you know what I mean, right? But he's not gonna do that. He's not gonna let that happen. And as of right now, I got a feeling the markets are being propped up big time as it is, because somehow, why the heck is platinum so much less than gold? It doesn't make sense. A healthy economy, platinum is actually not the average 1.4 times the price of gold. That's the average. But the average before going from 2000 to 2008, the platinum to gold ratio was 2 to 1. It was twice the price of gold. Twice. That was during the healthy economy when, the housing boom was going on and all this type of stuff. So something is really fishy here, and I do, when Marc Faber says this thing about, China's really having a bigger slowdown, they're pumping out a bunch of BS numbers. And that's figured into your primary global manufacturing index. But this guy is going to make silver and gold go up. So I just like to know when. And I'm thinking, he's going to open his mouth this Tuesday. Maybe the market might go up a little bit on the gold. And then if it does that day, I'm going to try to catch it on a trail or something. And I'm going to dump out of it. And I'm going to stay out mainly in cash, except for like the oil. And I'm also into copper. There's something else with the copper. The copper is lagging behind some of the markets in general. And that does not make sense. So I don't know, I'm thinking the other markets are going to come down to meet the price of copper. So I'm sticking with the copper, even though, but it's a pretty small position. But I'm mainly in cash, waiting for a pullback. And the silver bugs are going to go nuts. They're going to tell you it's a conspiracy. Well, you know what? They're going to be knocking this guy, and this guy's going to make you rich as all hell. And, your money is going to be, silver is going to go to $1,000 an ounce more than likely. But it's going to be inflationary dollars. That's what I'm thinking. So I got two predictions here. Short term, we're going to nail this 24. And long term, we're going to nail over 1,000 on silver. So, but time it. Well, I'm looking to get ahead of everybody else, which everybody else is trying to get ahead of everybody else, so it's not easy. But you know, I realize that a whole pile of people that are in the financial world are making, like in other words, if you got some BS Series 7 or some crap, you see, I don't like that stuff. I don't like that. It bugs me because I think they're crooks. You know, they walk around in suits and they study all this junk, and then they go go to school and they get this stuff. You know, and I got these things. Sometimes I got one of them for fun. You know, and it expired. I don't care. It's stupid. But they walk around and they got these initials after the name. It's like protection. And well, I'm this. And then they go, they talk to people. People believe them because the more initials you got after your name, the more they believe them. And they sell them this, and they take a cut out of it forever. So if you invest money with them, you know, they get, that's it. You know, it's all salesmanship. I'm more interested in being accurate.